positivity creeping back into the markets here. A second consecutive day of gains filtering through. What are you making of current activity and sentiment that we're seeing for now that is supportive of the markets?
We believe that the markets were largely oversold, having dropped from its year highs, losing about 12% and some more. And we've seen a rally in the last couple of days. We see investors buying at low prices, really just trying to buy the dips in the market and to position for the earnings season. We anticipate the earnings season will be positive. We also anticipate that after the elections we should see a rally in the market as well.
It's the financial earnings reports that are, of course, being anticipated here. What are your broad expectations on that front? What in particular will you be keeping an eye out for?
We expect strong performances from the top-tier banks. Largely, the market in the retail segment has been poor as loan creation has been poor. However, in the with the top-tier banks, we've seen a lot of corporate business being done, as well as taking advantage of the dislocations in the banking sector, i.e. lending to the weaker banks. As a result, we believe that we should see strong earnings, either as well as corporate actions from some of the banks, namely GTB, Zenith Bank, even First Bank as well.
Well, we wait with bated breath for those numbers to be released. We've heard in the meantime the African Development Bank add its voice to the implications of the North Africa crisis. It's saying that it doesn't see the crisis spreading, but impact will be felt via higher oil and food prices as well. And that remains a worry. How's it coming to bear on the Nigerian market?
Last week, we saw inflation actually drop. As against the analyst consensus of inflation actually rising. We do believe, however, that going forward, we do see pressure on food inflation, transportation inflation, driven by high energy costs, i.e. high crude oil prices. However, we need to look at everything in the context. So you have other drivers also playing and weighing in on this. So you have input costs, i.e. soft commodities, gold, wheat, haven't fallen from their 20-year highs, having dropped probably about between 11 and 15% in recent times. Also, we have seen transportation costs as well drop significantly. So we see the pressure easing on those ends, even though we do see crude oil affecting prices generally. We also do see the devaluation of the naira from 151 levels to 155 levels, also weighing in on this. All in all, I do believe that we should see slight pressure on inflation going forward, especially after the elections.
Of course, rising inflation would then exert pressure on the consumer. To what extent do you see this translating to the fast-moving consumer goods sector, which has been enjoying the steady upward momentum over the recent while as the consumer spend has picked up and as uncertainty persisted in the banking space? Are you anticipating sector rotation on account of everything we're seeing play out right now?
Yes, we do. We do anticipate sector rotation. However, what we see is when you divide the fast-moving consumer goods into two segments, i.e. Companies that sell to corporate clients as against companies that sell to end retail clients, the defining factor has to be inflation passed through. That is how much of the inflation figure the companies are able to pass through to the end consumers. So you have someone like a company like Dangote Sugar, whose clientele largely is institutional, selling sugar to the likes of drinks makers such as Coca-Cola or NBC. You then realize that they may not be able to pass on the costs. However, when you look at a Dangote flour, for example, they produce products for the end retailer, and they may be able to pass on this cost to such end retailers, and hence we believe that the ability to affect EPS or earnings will depend on the inflation pass-through. And we think that companies that sell to end retailers should fare better than companies that sell to corporate clientele. And today we should see the CBN come up with the communique of the MPC meeting, which held between yesterday and today. We expect moderate hike in the monetary policy rate, probably about 25 basis points.